Yeah, this was the past event. Yeah, present obligation is there, you have to pay, you have to transfer them economic resource, and that economic resource is cash. Simple. So that's what liability is. Yes, so now immediately you have to recognize on the face of your balance sheet that you have got a liability, and that liability is bank loan, rupees 40,000. Is that clear? I told you, right? Here we take all the capitals and all the liabilities. Yes? Yeah. Then here cash also has to be increased because you have got an asset also now. Yes? You have got your own cash also now, 40,000 from the bank. Yes, it's the bank cash, but now you own it. So it's your cash now. So 40,000. Yeah? So it will be increased. So 80 plus 40 is 1,20,000. So now the cash that is there is 1,20,000. Is that clear? Does that make sense? Yes. So you see this. Now what is happening? Capital, before you had claim on the total assets of the company. Yes, but now there is liability holder also, outsider also. Now this guy, this bank also has a claim on your total assets of the company. What is the total assets? See here, let's tally the balance sheet. 140. Yeah, 1,40,000 here. The capital and liabilities is 1,40,000. It will always be equal. Okay, 1,40,000. Yeah, 120 plus 20 is 1,40,000. So now you also have, I mean the owner, you also have claim on the total assets of the company. If you see the definition of equity capital, see here, it is the claim of owners in the total assets of the company after deducting all its liabilities, residual interest. Yeah, whatever that is left, that's yours. That is what is meant by capital, whatever that is left. So now what is left? What is left? If you want to see that, then simple. See here, the liability holders, they also have a claim. So their claim comes first, then your claim comes. Okay, the first priority goes to the liability holders and then the owners. Okay, so these people will have claim on the total assets and also you, but you will get only after deducting liabilities. Okay, your claim is only 1 lakh. So your claim is 1 lakh means that what? Total asset is 1,40,000. After deducting all its liabilities, it will be your capital. 1,40,000 minus liability 40, 1 lakh. 1 lakh is your claim. 1 lakh is your capital. Yeah. So what is capital? It is the claim of owners in the total assets after deducting all its liabilities. Yeah. After deducting the liability, whatever that is left, whatever residual interest is there, that's yours. Okay. That's the owner's capital. Is that clear? Yeah. So that is what it practically means. Yeah. Whatever that is left, that is the owners. Okay, and the liability, what? It is a claim of outsiders on total assets of the company. Clear? So did you understand this practically? Simple. And what was the asset? Something that is controlled by the entity as a result of past event, and future economic benefit should be there. Yeah, you can do whatever you want with the cash. Yeah, you can do whatever you want with the machinery, and you can expect that you will generate income, revenue from this machinery. Yeah, you will use it in the operations. Yeah, and you will do business, you will sell the whatever you produce with that machinery, and you will earn income. Yeah, that's what an asset is. Machinery is an asset, cash is an asset. Clear? Now let's understand the double entry concept. Yeah, let's go there. Are you clear with equity, liability and everything? Yeah, simple. Yes, let's go to the double entry. Double entry. What is this double entry? See here, it's very simple to understand. In accounting, what we do is whenever we record the transactions, we follow this methodology that is called double entry, where we record two aspects of every transaction, and every transaction will have two aspects or two effects. All right, one effect will be debit and another effect will be credit. But now you will ask me, what is this debit and credit? See here, debit and credit doesn't mean anything. These are just two abstract terms that we use in accounting to represent something. Okay, and that's something you will understand once you start building the concepts of accounting. Yeah, when you will learn how to part the journal entries and the balances of accounts, then you will understand what is this debit and credit. Yeah, directly I cannot tell you what it represents or what it, what it means actually. Yeah, because it doesn't have like that meaning. If I ask you what is plus, what is minus, can you tell me? You will say plus is add, minus is subtract, but what is add, what is subtract, what is that? It doesn't have any meaning itself. But if you tell me 2 plus 2 is equal to 4, yeah, then it makes sense. Similarly here, it will make sense when I relate this with assets, liability and everything. Okay, so wait for that. Just remember that debit and credit, they just signify the duality principle or dual aspect. Okay, we'll come to that. See here, we were in